Corey joining, see if he manages to join this morning. Maybe at long last, the early mornings have caught up with them. You never know. I'll keep myself on screen here so I can see when he comes in. And there he arrives right on time. Well, almost on time. Good morning, John, if you're there. Maybe just getting himself sorted.
Yeah, a little bit of a reboot.
Right. Very good. Another early morning for you?
Oh, yeah.
Good, okay. Right, we'll just go ahead and get started. So we'll get the record button on. So good morning, everyone. Welcome once again to our weekly broadcast. Thursday, 10 a.m. every week. We do a short 30-minute segment, and this is very much about just keeping in touch with our stakeholders, people involved in our passion, I suppose, for property crowdfunding. This is co-hosted with Mr. John Corey from Property Fortress. He runs a monthly event, very experienced in the world of property. So good morning, John. Good to have you on board here. Good
morning. And I'll be fumbling around with a few tech things in the background, so speak soon.
Yeah, 100%. And myself, David Johnson, CEO of LEOcrowdfunding. We are an equity property crowdfunding platform, and we're going to get into our weekly broadcast this week. So for anyone who's joined us for the first time today, the overarching aim of this 30 minutes is very much about learn, earn, and own. That's part of our DNA. And we all share a passion for education and learning. And what we're looking to do is just provide a 30-minute segment. I know we've got people who tune in every single week, hardly ever miss. And we just literally want to provide some learning tips, which obviously will help people earn money through property investment. So keep that in mind as we run through. This is normally what we do. Next week, actually go up there, Angus Griffin. You can see his name there. We're getting the slides ready for next week as well. I'm working well in advance. So Angus is actually the guest next week, ex-FCA enforcement officer, property investor, property professional. I look forward to have him next week. So as normal, we always start with a market overview. And the ones that Josh has selected for today for discussion. And we'll be hearing from Tony officially in a few moments, but Tony, feel free to join in this part as well. So the main segments: London super prime luxury property market was world leader in 2020. So UK capital is the world's leading wealth destination. So despite COVID, despite the uncertainty, despite all the apprehension and everything that was going on with COVID and property, London still remains the world leader when it comes to that super prime luxury, which is interesting. And that probably ties in with the second article, which is that UK property remains attractive investment for overseas investors. So I think there's a correlation there that overseas investors are the ones that are more likely pumping the money in for the super prime properties in London. So what's the thoughts on that, guys, in terms of that information?
Well, I mean, one of the things that's interesting is, and I know I've said this a few times and it's a bit blunt and in your face, COVID didn't kill that many people when it comes to the demand for housing. It is worldwide, over 2 million people have died. It's quite significant. But when you look at the mass of 7 billion people around the world, so the dislocation in terms of housing has probably been more because of lifestyle than from suddenly lots of properties are vacant. And people have figured out that they want more space, that they want maybe a few extra rooms if they're working from home and all this other thing. So home and home life and sort of working from home and being 15 minutes from home to work, to play, whatever, these are all phenomena that maybe COVID brought on, but it hasn't changed the desire to have a home. So, and frankly, also people have a lot more cash right now because they're spending a lot less on most other things.
Yeah, no, it's interesting about people having cash, because genuinely have been talking to people in the car dealerships, and they're doing more business now than they've done in a long time, because people aren't going on holiday, therefore they're deciding to change the car, and certainly a number of car dealers I know in Northern Ireland are having sort of bumper time when it comes to secondhand, even new car sales. So, in terms of overseas investors, Tony, it seems to be remains one of the hotspots for the high net worths, the uber high net worths, to sort of get involved in the super prime market in London. As a kudos goes with it, to owning a property in London, and I'm sure you agree that's something that's probably not going to change too soon.
Yeah, absolutely. When it's not just London either. I think the north of England prices are raising much higher than London. Even it's not prime location, but you've still got the second cities.
Yeah, no, for sure. And certainly I've done a bit of work out in Asia. Certainly London was the first place I want to talk about, and then after London it was the big cities. Ironically, in some markets in Asia, it was very much the big cities around Premiership football clubs. So if it was Manchester and Liverpool and those type of cities that identified with a Premiership club that obviously they were watching on TV, then there was a greater interest to invest money there. So that's the interesting topic in terms of London super prime. Some more headlines that have been selected. COVID-19 is no match for property market as house prices hit record high in March. And the average house price of the UK has jumped to a record high, 254,606. So again, a conversation that we've had literally almost every week for the last 12 months of COVID. And despite the blips, the ups and the downs, the property market remains very, very strong currently. It's not to say that factors won't change in the months ahead that may have an impact on it. But certainly for now, John, it just remains a upward trajectory at the minute. And I mean, no one knows what the future holds, but it certainly remains buoyant and attractive to property investors.
It does, and people have to pay attention and sort of watch what's going on. Most of the housing is tied to people's incomes and their salaries. The super prime is a little bit different. It tends to be cash purchases or very, very high amounts of deposits rather than big, massive loans. So employment trends are probably what people should watch most closely.
Very much so. So if anyone has any questions or any comments, please feel free to add them to the Q&A. We don't use the chat box, but always keen and encourage those who are attending the weekly broadcast to put in your comments. And if you have any questions as well for the panelists, then by all means fire those in for us. So we will once again be in Clubhouse today, 11 a.m. to 12. Topic today is why create wealth in property through property crowdfunding. So there'll be a number of panelists on there today. And for anyone on Clubhouse, it's in the calendar of the Clubhouse events. You can find us there. If you don't actually have an invite, if you're on Apple and don't currently have an invite, reach out to me. I've got a couple of spare invites. I can certainly invite people on. So this is an invitation only, what you call it, a social media voice only community. And John, certainly it's all the information, all the trends seem to be that Clubhouse is just going from strength to strength in terms of numbers and reach.
It is. It's not my favorite medium in the sense that it's audio only. I'm not really the type that just wants to chat on the phone, so to speak. But what it is quite easy to integrate. It's like listening to a podcast where the audience gets to participate. So there's definitely an element or ability to engage, and it's quite light tech. I can roll out of bed, turn it on, go for a walk to get some exercise and not have to worry about my bad hair.
Yeah, which is one benefit for sure. But yeah, it's interesting how let's go forward. So I know Tony, you're on Clubhouse as well. I know. So how have you enjoyed interacting with it and listening into different topics?
Yeah, I think it's a really good medium, actually. But as John said, it's got its limitations. But if you do think of it essentially as like an interactive podcast, it actually works very well. It's got a good reach.
Yeah, no, the reach is certainly certainly growing on that. So, okay, let's get on now with the next bit. So we usually have a special guest every week, as you know. And this week, what we've done is we are introducing a new member of staff. No guessing for who, given that we've been talking to Tony for the last couple of minutes. But I'm delighted to be able to announce that Tony Allner has joined the Leo crowdfunding team as our Chief Operating Officer. So Tony, you're very, very welcome on board. Great to have you as part of the team.
Thank you. Good to be here.
Yeah, brilliant. So some of you may be aware, because I know Tony has been speaking to some of our fundraisers, some of our investors over the past number of weeks. So we actually brought Tony in as a consultant about 2 months ago. And you can see from his background, which I'll talk through in a minute, he's got considerable experience in the crowdfunding space, particularly in the startup and early years of crowdfunding platforms. So we actually brought Tony in 2 months ago just to look at our operation and to give his opinion on what we were doing well, what we can do better. And that relationship has evolved into us offering this role as a Chief Operating Officer. So really looking forward to growing together as we take Leo crowdfunding to the next level. But Tony, over to you initially. So you want to just give us your background, obviously your sort of early years business-wise, and right through to what you've been doing more recently.
Yeah, okay. I stem initially from a banking background, where I built up my experience, if you like, with wealth managers and stockbrokers. I got particularly involved in on the ISA side with tax-free investments, and that was the natural transition that I made from banking into crowdfunding and fintech in general, where I started at RateSetter, and we integrated the innovative finance ISA, which was in its infancy then, into the existing ISA environment, but also, made it fit for purpose for the crowdfunding environment. So I was one of the first people to do that. There were a lot of considerations to take into account. And I think I helped HMRC build the process as well. And then on the back of, I actually started with one of the big four, which was RateSetter. And naturally, following on from that, I helped PropLend as well, who were also, they were in their infancy back then. This was the early days of crowdfunding. So I got in quite early, and I think there are a lot of transferable skills from the banking sector that perhaps other crowdfunding platforms have been slow to take on, such as the need for, a real premier service for fundraisers, but also for investors as well, which I still think is a bit lacking in this world. So naturally, Leo was attractive to me because of your focus on educating investors, which is a huge gap in the market, I think. And with the FCA scrutiny now, they've certainly wheedled out the less reputable firms, I should say, without mentioning any names. And I think it's got a really, really good ground now for people to promote the good side, the benefits of crowdfunding, and how it's a really viable alternative to banking.
Yeah. Okay. Yeah. So in terms of obviously John comes from a banking background as part of his career as well. In terms of Easy Money, just explain sort of the context there. Obviously, Easy Money are part of the EasyJet brand, and how did that come about? How did you end up being the CEO there, and what was it like in the early sort of formative years of Easy Money?
Well, Easy Money is property based as well, so I think the work I'd previously done at PropLend got me a foot in the door there, and they were I was there from pre-launch, so I was involved quite heavily with not only running the platform but also launching it as well. And I think initially I was there because their first product was the innovative finance ISA, but then it just made sense to sort of build operations, and I worked alongside the CTO, and we got it up and operational quite quickly, got approval from the FCA, and just continually improved the processes as we went along. It's quite a fast builder because the Easy brand is obviously recognized across Europe. So we had European investors as well. And like I said, the Easy brand's instantly recognizable.
Yeah, no, that certainly helps, I think, when you're starting a company.
Yeah, and sorry, that's in the peer.
Yeah, I was going to say, so that was very much in the peer-to-peer space. So the lending space is obviously not the same for Leo crowdfunding. We're in the equity space, but it does have obviously similarities in terms of the overall model. So yeah, so easy money obviously is a nice thing on your CV, which is great. And then you've had various other roles within crowdfunding, which brought to where we are now. So just explain then your role, your COO role then within Leo crowdfunding. What is it you're going to be doing as that role, just so our attendees get a feel for your job description, if you like.
Well, as you prefaced earlier, I've already been here consulting anyway. So I've identified areas for improvement or enhancement, and I'll continue in that vein. Probably I'll run operations. I think I'm quite keen to get a premier relationship management service in place so that both the investors and the fundraisers are looked after, and the process is more seamless and user friendly for them. And I'll also, be working on the regulatory side, making sure we remain compliant, looking for updates and changes in regulations, things like that. And I've also got experience in marketing as well, and legal and compliance. So I can hopefully be an all-rounder for you.
Yeah, no, good. I mean, one thing I'm looking forward to obviously is sort of the CEO having had the responsibility of kind of running the operation as well as being the CEO. You coming on board is going to free me up a little bit to be, dealing maybe directly with fundraisers, looking for new fundraisers, particularly, some of the investors, but just looking at strategically taking the business forward in terms of, obviously we've currently got an equity round happening. And those strategic relationships, strategic partnerships, it frees me up if I like to focus on that as opposed to say the day-to-day operations, which is now going to be over to you, which is great. So what difference do you think you'll make? So say give it 3-6 months, it'll take a bit of time, but for our investors or fundraisers, in 6 months' time, looking back, what do you think they're going to notice the difference you're going to bring to the table?
I think it, as I sort of referenced just now, the main difference will be in the process. It'll be a lot more seamless, I would imagine, and the legal documents will be easier to work out and to use, and there'll just be better interaction and a more interactive and collaborative process. And certainly from the investor side as well, there'll be a nice, more personalized support for them. And I'll be constantly looking at ways to improve and enhance things anyway. So would welcome feedback and collaboration with people who are users on the platform as well. And I've been in senior operations management.
Hello, John.
Sorry, go on.
So go ahead, finish that sentence.
I was just saying I've been in senior operations management for 15 to 20 years now. So I know what to look for, what to change, what to enhance, and what to build on as well.
Okay, excellent. Now, John had dropped off there as you're sorting his IT out. We're talking about the banking background that Tony has, John, and I know obviously you've got a part of your background is heavily in banking. So I think it's fair to say that John, you and Tony are cut from the same cloth when it comes to processes and detail and statistics,
Yes.
and how you kind of look at a business through that realm. So I know you're certainly happy that in terms of that identify, and it is important, John, from a business point of view. I mean, processes are important.
Well, the other part of it is a sort of tech guy and also from Silicon Valley. You want a business that can scale, and the only way you can create scale without killing your costs is to have better processes and better flow, so that the user experience, the customer, the client, the investors, all the rest of the people involved can have a better and better experience, but not rising costs. And you want to see volume go up, so there's more choice for the people who are investing. You want to see volume go up so that there's more people raising money. A good marketplace thrives on the fact that everybody just automatically thinks, oh, got to go to the market, and they want to go to the same market because that's where everybody else will be, and that's where they'll get the best price, the best selection. And that's largely how I see Leo crowdfunding, is that it's a marketplace for people with deals and people with cash to meet, transact, and smoothly transact, so that everybody can see what's out there, make their choices that are appropriate for them, do their homework to make sure that it works, but that it's a predictable process.
Yeah, very much so. Okay, so last question, really, Tony, for you, in terms of, you've been in 2 months now, obviously, as a consultant. So how have you found Leo crowdfunding in terms of when you sort of came in, not knowing what to expect, to kind of what you saw, what we've been doing, how we're doing it, potential of the business? Just finish off with that for me, please.
Yeah, well, actually, I was expecting, as I have done with other consultancy roles, there'll be a significant need for improvement and change. And I don't think there is actually an awful lot to change with regards to the level of service you're providing, because investors and developers certainly get a very high level of experience, which, as I said before, I think is lacking in this industry quite significantly, certainly compared to the banking background, where they're high on relationship management. So I think the key thing was just streamlining the processes, making them a bit more fluid and quicker from start to finish, and adding a bit more uniformity to them, so that you have more of a timeline and you can see exactly where each stage fits. Start working on other elements in the background while you're still progressing with part A. So I think it's just fine tuning and tweaking at the moment. But with regards to potential, of course, there's so many different other areas you can move into. And you've got the educational part, which is a big part for me, because, again, I don't think investors and fundraisers have the right educational element support from other platforms. So there's certainly a lot of areas you can delve into further down the line as well. Even, you could look at P2P or tax-free vehicles, or so many different areas.
Yep, no, indeed, it's exciting time. So again, listen, Tony, great to have you on board. Look forward to working with you. And
so there's a question.
Comments coming in there.
If the platform offers better and better services, does that mean we're going to have higher and higher costs? So Tony, as a business scales, do costs have to go up?
No, not necessarily. A lot of the time, all you need is someone who's already been through that experience of crafting and honing a platform, and develop it yourself. It might not be immediately obvious to platforms who haven't had that level of experience, and all you've got to do is tweak it or fine tune it. A lot of it, it's not all about enhancing technology or bringing in completely new ways of looking at things. It's just literally can be just tweaking or adapting.
Yep, very much so. Okay, let's get on with the next bit here as we go to wrap up. So there is the current team, if you like. So some people are saying, well, where are things currently? So obviously myself as CEO, Aisha as co-founder, and will be a non-executive director, and then Tony kind of runs the operations, the bit in orange, with Asher, our head of online marketing. Brenda, who does administration and compliance, and we've currently got an intern for the year work experience, Josh, who's the executive assistant. So that's our team delivering the fundraisers and the support to the investors. And then we also have on the advisory board side, sort of non-paid role, advice only, is John Corey, of course, and Mr. Ian Cartmill, very experienced in crowdfunding and investing. So that is the team, in case anyone's wondering what is there currently. And we've currently are advertising for an investor relations professional to come in and work particularly with our investors so we can improve on our investor support. So moving then to what's currently happening on the platform. This, our old Woolen Mill project, is live for investment. It actually finishes next Wednesday at 12 noon. This is a planning uplift project down in Devon. The minimum was set at 65, the maximum at 155. And this project was projected to return 50% per annum. Now, this is a planning uplift, obviously more risk involved here than an ordinary development project, but to balance that off, then the fundraiser is willing to give a greater reward. Now, John, this one, obviously you're familiar with this one. You obviously have worked with the client, Susie Jenkins, 94,400 from 47 different investors. So again, there's been a great appetite for this among investors to jump on this, some for learning, some just to obviously see if they can get the projected ROI of 50%, which is attractive. So what's your take on this as we move to the last week of the raise?
So a couple of things. First of all, planning is high risk, but I also think the rewards are commensurate with it. Both someone who helped put together this offer and also one of the investors. But you should do your own homework, make your own decisions. Shouldn't matter who's investing in it. It has 47 people total that, or businesses or whatever, have invested in it. And I think planning uplift is a good strategy. It can be part of someone's portfolio, and you should be able to look at a number of different planning opportunities and spread some money across them to risk mitigate anyone getting a bad decision. This particular project, I like it. It's a larger project. That's why the sums are a bit bigger for planning. There's essentially 2 phases to the build, and it's a great opportunity to learn as you invest and learn, earn, own, so that you can follow along, you can see how things work. If you like the returns and you're happy and you have the money that you can put at risk, then yes, there's quite a upside if this works as planned.
Yeah. I know there's been a lot of focus. We've obviously been focused a lot on it in social media, the whole area of planning uplift. It's a niche that I certainly like very much. I think crowdfunding really can provide the funds, for people to apply for, for their planning application. I know a lot of different deals are structured differently. They're not all the same. So I think it is important investors should read each individual one and make sure they're all structured. I know there's a question was asked on our forums, I believe, about, well, does the fundraiser, are they putting much skin in the game? And if the increase in the value of the asset is a significant increase post-planning, how does the percentage split work and the profit share work? So in this one, just to be clear, Susie, the fundraiser, has committed to underwriting the difference between the minimum raise and the maximum raise. So it's at 94 at the minute. Let's just say it got to 100. Well, Susie has committed as the fundraiser to funding the other 55. So there's absolutely skin in the game by Susie and her team, as fundraisers in this. And obviously 50% ROI projected is certainly a very healthy ROI. And really, John, I've heard you comment about this really, but market rate. It's not so much about the increased value of the asset. The offer is you help fund the process and you get a 50% return on your money potentially. That's what's on offer. It's not about what value's been increased in the asset.
Yeah, I mean, personally, I'm happy at the 50% mark, and I don't really care too much what the other people are making. It's what works for me. Now, one of the things that should be clear is that this is 50%. It's a hurdle or a priority sort of return, in the sense that I and the other passive investors will receive our returns up to that 50% mark before the project sponsor, in this case Susie, receives anything. So effectively she gets 0, we get 49.50. Only after 50 is there any split of any profits above that. So you do need to read the document, all the details there. If you like it, you're in. If you don't like it, you're out. But essentially, I like being front of the line when it comes to returns.
Yeah, very much so. So in terms of the moving towards the close of this project next Wednesday, we're doing the final project webinar next Monday night. That's the 19th of April, 7 p.m. You can see the link there, so you can do a screen grab there, do a screenshot if you want, and tune into our social media. It'll be on our weekly update that went out there yesterday. But you can tune in if you have any questions. Susie will be on, so it's a great opportunity. I know, Tony, Susie's always more than accessible to come on and answer questions, deal with any concerns investors may have or not sure how it's been structured. She's been very, very, very open, which has been, I think, very, very attractive to investors. In fact, they've enjoyed her candid answers to the questions. So Tony, we're looking forward to Monday night and having another webinar as we move towards the close on Wednesday.
Yeah, and I'm a big fan of the fact that Susie is heavily into education as well, and she wants to bring people on board with this and show them how it works, right from beginning to end. So she's got, as you say, she's got a lot of skin in the game as well. So she knows what she's talking about.
Yeah, absolutely. Okay, so that's Monday night, 7 p.m. Project webinar with Susie and the team as we move towards a Wednesday close on this project. Also announcing a coming soon, which you'll see on our platform currently. This happens to be another planning project. We've got some vanilla projects that will be launched very soon. It just so happened this one came out at the top of the pile going through the process. And this is from Creation Tech. Many of you will know Hitesh and his business partner Ray, experienced in the world of property in their own rights in different spheres. But they also did a raise in the Nuneaton on our platform last year that went very well. That project is slightly ahead of schedule. Possibly paying back slightly ahead of schedule to the investors in a few months' time. But this is a planning uplift opportunity in Scotland. It's about 40 minutes drive from Edinburgh, about 25 minutes drive from Stirling, and it is a farm sort of house location, and 35 acres. And there's planning due to go in for between 6 and 9 units on this plot. So it's a beautiful location, very much sort of rural Scotland, which is very attractive to a certain part of the market. And this is coming soon, and obviously will be launched in due course on this one. So John, any comments on this one? I know again, Hitesh is someone that you know. He spoke at your event on Tuesday night for your virtual monthly event.
Well, there's a couple things. First is it's coming soon. That means you can't see the full document. So I don't want to go into details that aren't available to everybody. Essentially, though, this is a development opportunity where they're going to go through the planning phase first. The investors are going to be taking part in just the planning phase. The site has had planning for a certain number of houses. They want to change the number of houses and make them more size appropriate when it comes to the demand in the area. And like the other planning offer from Susie and possibly future ones, these are opportunities for people to spread a bit of their risk by investing in different teams and different locations. Look carefully at the team, who the planning consultants are, who the architects are. That actually has a big influence in the outcome of these projects. But I think people will find this one interesting. This is a smaller raise. It's a smaller exercise when it comes to the planning work that needs to be done. It's a smaller site.
Yep, absolutely. I'm looking forward to it. And obviously there'll be webinars and more information in due course as soon as we're ready to announce that one. Obviously, you can reach out to John and I if you want to have any conversations with us directly. There's our information on the screen. And again, Clubhouse at 11 a.m. this morning. So if you're
there is a
and
question,
you can tune into Clubhouse. Okay, John.
There's a question from the audience.
Yeah, I was going to come to that now. So I was going to go to there. So I was going to reverse back now. So whatever questions are there, we can deal with them before we finish off. So do you want to ask the question, John, or want me to ask it?
So the question is about IFISA, so Innovative Finance ISA, and whether that's available through the LEOcrowdfunding platform.
Are you going for that, David? It's not.
No, I'll let you fill your boots as the new COO. You can fill your boots.
Yeah, it's not available at the moment because on the equity side, they don't no longer offer that facility. I think it was for bonds, wasn't it? So yes. The only real possibility of getting the IFISA on board is if we do peer-to-peer, which I'm sure you're not ruling out, are you, David?
Something is very much in the potential for the future. So yeah, unfortunately, being an equity platform only currently, we're not able to offer the FISA solution, but it's something that we would definitely like to do when we possibly can. Another question was at the top there. Can you check with the panel how lending to developers, especially the commercial lending market, is maturing? Is there a good demand from developers to raise finance? Any thoughts on that, John?
Not really. I mean, it's maybe something that we should look into, but from a top of my head, I don't actually know the size of the lending market. How many bridge lenders are there? How many transactions are done? How many borrowers are there? How many borrowers do more than one project in a year? There's a lot of variables that could be interesting to look into. I mean, I do want to emphasize that the LEOcrowdfunding platform, as an advisor to it, it's very much focused on the equity side. So there's things that the platform can fund, like planning, which don't involve debt. So there's development in the context is normally a big chunk of debt and a bit of equity. And that equity can vary, but you can use equity for other types of projects that are not just development.
Yeah, absolutely. And for the person that asked the question regarding the lending to developers, we actually had Rory O'Mara on as a guest 2 weeks ago from Close Bridging Finance, and he gave an update 2 weeks ago just on the market currently. It's something that we do intend to do on a regular basis. I think we should even make almost that side of lending and senior debt, perhaps almost a weekly 4 or 5 minute slot, just for the very latest on what's happening, for developers. So there's certainly demand out there currently. I know Rory had said it's been a long time since he's been as busy. So he's certainly getting lots of applications in from developers. So hopefully that answers your question. And the last comment we'll finish with, it was a good move to bring Tony on board. Good luck, Tony. And the haircut looks great. So I know this is your lockdown haircut. You'll
I haven't had a chance.
The contributor has said.
Yeah, I haven't had a chance.
You've got a fan club already.
Yeah. I haven't been to the hairdressers yet.
You've got a fan club already. So listen. Yeah. So fantastic. So welcome on board, Tony, again. Thanks, John, once again for your contribution today. And next week, we're joined by Angus Griffin, ex-FCA enforcement officer, property professional. I'm really looking forward to the conversation with Angus and what's going on in the world of compliance and property. So thanks everyone for joining. Have a great rest of the week. And above all, of course, stay safe.